Hello everyone, welcome to a new video. This one is going to be a weekly outlook where I'll be sharing my watch list, the pairs I'm interested in, and I will focus on clean directional pairs only. I'll be sharing the levels on the charts that have the potential to provide a trade setup and as well as the draw on liquidity for each pair. I will also walk you through the logic of each one and my trading plan for executing the trades. Now, before we start, I want to clarify some crucial points since this is my first outlook video. So, if I show you a bullish fair value gap on the higher time frame, for example, and mention that I'm looking for buys once the price reaches it, it doesn't mean I will hit the buy button the moment the price taps into that fair value gap. No, it doesn't work like that. If you have watched my previous videos, you know that I base all my trades on 3 different time frames. So, time frame alignment. For example, if the price reaches a daily fair value gap, I then drop into the hourly time frame to look for reversal signs or indications. The hourly needs to turn bullish as well. After that, I go one more time to the lower time frames like the 5-minute or the 15-minute and wait for them to turn bullish as well. I have explained all that in my previous videos, so make sure to watch them. Another thing I want to clarify is that I don't need every idea to work to be profitable for the week. All I need is 2 or 3 ideas to work, and I'll capitalize on them. My trading plan will protect me from wrong ideas. So most of the time, when I'm wrong about a certain pair, my plan doesn't offer any signal to buy or sell. So that's pretty much it. And now let's head into the charts. Now, a quick reminder, I share most of my ideas on my Twitter account. So if you want to follow me there, all you have to do is look for this name, or I'm going to leave it down in the description. I share here ideas and you can access them earlier, right? As you can see here. And now let's just head into the chart. Now, my process of choosing pairs involves going through each one of these instruments right here. As you can see, there is a lot of pairs. We have gold indices, right? And Forex pairs, of course. And going through them one by one and filter them, it's going to take time. It's going to take a lot of time. So instead of doing that, I have already did that, and I'm going to share with you directly my watch list right here. So only 10 instruments. So these are the pairs that I'm looking for. Because as I said, if we go through each one of these pairs and analyze it live, it's going to take a lot of time. This video is going to be like an hour or so. All right. So let's jump straight into the watch list and start with the first instrument. So the first one is the DAX, right? This is an index. And let's go to the higher time frames. So on the weekly, what do we have? We can see that this index has been bullish for the last couple of weeks, right? It offered great buying opportunities, right? And the draw liquidity is obviously this swing, right? We have this order block, but as you can see, the closure of this candle right here, it obviously wants to go to this swing right here and take liquidity. So for me, I'm not interested in the buys right now. Why is that? Because we are in extreme premium, right? So I can't buy here. I mean, there are some traders that will scalp this, but for me, I like to buy in discount, right? So what I'm looking for on this particular instrument is a run on this external range liquidity, so on this swing high, and then looking for retracement to this imbalance right here, and afterward maybe looking for buys. So if price is likely to reach this swing right here, I will look for 4-hour reversal signs. So 4-hour market shift, right? So basically waiting for the 4-hour to shift from bullish to bearish. If you go to the daily, as you can see, we're on an extreme premium, and I'm not really interested in this right now. Some of you will say that I'm missing out on the buy side here, but I have a lot of pairs to choose from and I don't need to force anything. This is my trading plan and it's been working for me like magic. And now let's go to the next pair. So the next pair is US dollar against the Japanese yen, so a Forex pair. If we go to the weekly time frame, we can see that from this swing low right here to this swing high, so this is the range, the weekly range, we can see that we are on premium, right? And we have this fair value gap right here in discount. So I'm looking for a move to this fair value gap right here. Now, this is the liquidity, right? But, and this is important, I don't need for price to reach all the way to here to capitalize on a sell opportunity, all right? Price doesn't need to reach the down liquidity in order for me to be profitable. Most of my trades, I have a fixed 2R, right? 2R on the lower time frames, and price does offer that all the time. So this is the weekly time frame, this is the on liquidity. If we go to the daily time frame right now, as you can see that we were on a buy program right here. So price has been bullish and now we have a shift in market structure. So taking liquidity from here, right? Sweeping liquidity from this high and then shifting structure. Price, we have an expansion to the downside, retracement. Price left this fair value gap open. Why? It hit this breaker, right? This breaker block right here, and then broke structure to the downside. So another expansion. After an expansion and taking this external range liquidity, what we can expect? Retracement to internal range liquidity. So to this fair value gap right here. And if we measure this move from this swing low to this swing high, we can see that price retraced to premium, right? Premium, and then one more time break structure right here. And as you can see, we have bullish candle right here. So in a sell program, up close candles will hold price and push price to the downside, right? As you can see, this candle right here, price returned to it and it offered resistance. So I'm looking for price to come back to this. This candle offers resistance and we continue to the downside right here. If we go to the 1 hour time frame right now, we can see that we have right here a break of structure, expansion to the downside, and what I'm looking for right now is a return, a retracement to this fair value gap right here, maybe, or maybe this one, I don't know, right? So a lot of you ask me, how do you know that which fair value gap will hold price? For me, it is a matter of confluences. So as you can see, this fair value gap right here has this daily order log as a confluence, right? So maybe price will come back only to here and then continue to the downside. It doesn't need to come back all the way to here. So price doesn't always retrace to premium. Sometimes it just retrace a little bit right here and then continue to the downside. The other correlated pair can retrace to premium. So let's say, for example, EU and GU. They both had expansion to the downside. And now we are looking for a retracement, right? Sometimes EU will retrace to premium and GU doesn't go to premium. So this is a type of an SMT divergence. When two correlated pairs, one of them reaches discount or premium and the other one didn't, this is an SMT by itself, all right? So this is my point of interest, this fair value gap right here. And if not, I will look for reversals on premium right here. How do we know if price will reverse from this one or this one? Using the lower time frames, guys. So this is why I told you that I don't sell blindly. I wait for the time frames to align with each other. So next thing, I'll be looking for the 15-minute and the 5-minute time frame to turn bearish, right? And of course, we need the time to align, of course, all right? So time is a very important factor here. And I believe we have done with this pair, and let's move on to another pair. All right, so this is EU, right? Let's go to the daily time frame. Let's remove this. So on the daily time frame, we can see that we have a sweep on liquidity right here. So a sweep on external range liquidity, hitting this fair value gap, this daily fair value gap, and leaving a fair value gap behind. So on the downside, on the sell side, we took external liquidity and we have hit internal range liquidity. So there is nothing to do on the downside right now, but on the upside, we have this inefficiency right here. So I'm looking for a move from here to this fair value gap right here. On the 1 hour time frame, this is what we have. We can see that price is now, we have this expansion here to the upside. We're violating this fair value gap, this bearish fair value gap, creating a fair value gap right here, a bullish one, and it starts to react from it. So this pair right here, I'm not gonna force anything because it's not that clear. What I'm looking for is another 1 hour break of structure right here. So another expansion, breaking this swing high, and next thing I'm gonna capitalize on a buy to this fair value gap right here, to this inefficiency. So this is a draw on liquidity for now on this particular pair. Again, the time needs to align. All right, let's move on to another pair. So this is the New Zealand dollar against the US dollar. This order block is a monthly order block, I believe. No, it's a weekly. So this is a weekly order block, and I'm looking for price to dig deeper into this order block. I'm not looking for a reversal here. So I want to see more bullishness. If we go to the daily time frame, as you can see that the order flow is still bullish. We have an expansion, and then price return to this fair value gap right here, and we have another, and price started reacting from it. If we measure the move from here all the way to here, we can see that price never retraced to discount right here. So this is what I was telling you earlier. Price doesn't have to retrace to discount or premium. And one of the reasons in this particular case that we don't have really any efficiencies right here on discount. So price found support right here on this fair value gap. After it bounced this inefficiency, it's now heading to the upside. And the New Zealand dollar currency now is very strong. So this is one of the reasons. So this pair right now, as I said, it is in premium, in extreme premium, and I will not rush anything. So I'm looking for this order block right here. So if price retraces to here, I will look for the 15-minute to turns bullish and see if it's aligned with time, and we have actually targets right here, low resistance liquidity to target. So this is one of the conditions. As I said, I have explained my trading plan in my previous videos. So if you watch those, this outlook will be so clear to you. And let's go to another one. So I have shared this one on my Twitter account. Let's go to the daily. All right, so this is the euro against the Australian dollar on the weekly chart. From here, this swing low to this swing high. As you can see that this is the weekly range, and we are digging deeper into discount. Do we have a reason to go to discount? So on the New Zealand dollar against the US dollar, we didn't have really a reason to go to discount, but in this case we do have a reason. We have this inefficiency right here. A big portion of this inefficiency or this imbalance left open, and I believe that price will rebalance this. So this is the draw on liquidity, bullish fair value gap right here, BC, right? This is the draw on liquidity. Now if you go to the daily time frame, the 4-hour time frame, this is what do we have. As you can see that from here all the way to here, we were on sell program, and I have predicted this move. So from here, right here to here, to this original consolidation. I shared that on my Twitter account. You can go and check it out. As you can see, we have a bearish order flow. So we have this right here, this inverted fair value gap, inverted gap, if you may. We have swept liquidity. So each time price expand lower, it will sweep sell side liquidity. And if it's sweep sell side liquidity and hit a bearish PD ring, so that's a strong resistance. All right, so then after that we have an expansion lower, breaking structure, returning to a fair value gap, expansion lower, returning to a fair value gap, and this order block, another expansion lower, returning to this order block, and this is the dealing range that we have on the 4 hour, from this high right here to this high to this low. We have a bearish fair value gap, a CB right here. So what I'm looking for is a retracement to this one right here, and then I will go to the 15 minutes, right, to the lower time frames, 15 minute and 3 minute, and look for reversals and a continuation to this right here, to this fair value gap. So this is the euro against the Australian dollar. Let's go to another pair, and this is the Australian dollar against Japanese yen, right? So now this is the Australian dollar against the Japanese yen. If we go to the daily, and I'm already in a position right here. I have take a buy from the 15%. This is on my swing account. The TP is still 60 pip away, so it's going to take some time, all right? Or maybe you're going to hit stop loss. I don't really care. Now let's go on the daily time frame. So this pair is clearly bullish. It's been bullish forever, since August, and it is respecting every fair value gap on its way. This one, and now this one, this fair value gap right here on the daily. As you can see, the buys stayed almost inside. We have also this inverted fair value gap, but I'm not really interested in this one because we have violated this. Let's remove it. So we can see that we have returned to this internalized liquidity, and we have also a reason to go to the upside. So all this filled swings right here represent a pool of liquidity. We have also this relative equal highs. So this is the draw on liquidity for this pair right here, the external liquidity. If we go to the 1 hour, as you can see here, the 1 hour turned from bearish to bullish. So this is what I was telling you earlier, waiting for the time frames to align. And after price retraced to discount right here, I capitalized on a move right here. I took my entry right here on my swing account, all right, not my intraday trading account. So for intraday trades, I'm looking for something much cleaner. So I want to see maybe a run on this field swings right here, and then a displacement. This would be ideal, or maybe a displacement straight away and an SMT divergence. This is not clear enough for me, and I'm sitting on the sideline for intraday trades on this one. Now let's go to another pair. So this is the Swiss franc against the Japanese yen. Let's take a look at it. This one is also bullish, but we are in a consolidation right here. So I will not force anything on this particular pair. As you can see, we have an expansion to the upside, right? Expansion violating this CB right here. And now it is an inverted fair value gap, and it is what? Offering support. So this is on the daily. And for the target, we have this equal highs right here and this filled swing right here. If we go to the 1 hour, as you can see, the 1 hour is still bearish. And if price violates this order block and this inverted fair value gap, then I would stay on the sideline and abandon this pair. But if it offers a nice market structure shift right here, so a bullish displacement, then I would look for buys. This pair, as I said, is not confirmed yet for buys opportunities. So for now, we don't have anything. Let's take a look at another pair. So this is the euro against the Canadian dollar. Let's go to the daily time frame. The weekly. All right, so on the weekly, from this swing low to this swing high, we have this weekly range. We have take external range liquidity, guys. So after taking external, our target is internal range liquidity, ideally on discount. So for me, this is a draw on liquidity, this fair value gap right here. Again, I don't need for price to reach all the way to here to take a sell position. I'm not looking for 20-hour move. All I'm looking for is 2-hour move, all right? So this is the draw on liquidity on the weekly. If we go to the daily, all right, on the daily, we have this mitigation block. This is not a breaker block. This is a mitigation block. This is also a mitigation block, all right? So bullish PD arrays on the buy program, once we reverse and turn into a sell program, now they will offer resistance, and they called mitigation blocks. So we have this mitigation block on the daily, right? And let's go to the 4-hour or the 1 hour maybe. So of the 4-hour. On the 4-hour, we have an expansion. So as you can see, we have an expansion. Price return only to this fair value gap. So we didn't reach to premium, right? It happens. Here we have another expansion. Price reached to premium, but I'm looking for another maybe sweep on this short-term high, and maybe to this mitigation block, and then I will look for short opportunities on the 15-minute and the 5-minute time frame. If it's broke lower from here, then I would reevaluate the situation. All right, let's move on to another pair. This video is getting longer. I apologize. So on the US 100, if we go to the weekly time frame, as you can see that we have an expansion, right? After the expansion and taking external liquidity, what is the next target? Internal range liquidity to this fair value gap. And I have called this move right here. If you go to my Twitter account, I shared the idea of going long from this weekly fair value gap. As you can see, that price hits the consequent encroachment, so on the 50% level of this weekly fair value gap perfectly, and expanded higher. So this is algorithmic. Now another expansion hitting what? This fair value gap and taking external range liquidity. So after that, what is my next target? Obviously this fair value gap right here, internal range liquidity, this one and this one. So my plan for this is on the weekly. So we are on the weekly right now, right? Next, I want to see the 4-hour turns bearish. So as you can see, we are bullish from here. And now we took liquidity from here, and we have some kind of a reversal pattern right here. So mark structure shift, returning to this fair value gap, another break of structure, returning to this fair value gap. But I want to look for another break of structure to really confirm the bearish idea to this fair value gap right here. So I want to look for another 4-hour market structure right here. All right, and this will confirm my idea. This is it for the US 100, and for the last pair, which is for the Australian dollar against the Canadian dollar. If we go to the daily time frame, you can see that we have an expansion returning to this fair value gap, and then price starts going higher, and then a sweep on liquidity, balancing the rest of this inefficiency, and we have a strong rejection. So this indicates that this is only a sweep of liquidity, and not a break of structure. So after the daily, we go to the 1 hour. And as you can see, this is a market maker a buy model, the original consolidation, and it is also equalized, and the down liquidity is just above it. So we have here a 3 drive pattern. Price was constantly taking liquidity 1, 2, 3, and then expanding higher, right? So market structure shift, displacement toward our draw on liquidity. This is what I like to see on the charts. A displacement toward the draw on liquidity. Now, my plan is to wait for the price to reach this fair value gap right here. We have also this breaker block, right? And I will see if price offers any reversal patterns on the 5-minute time frame. I believe we have another pair I didn't add to my watch list here, which is the GPP CAD, I guess. These pairs are correlated, so they have pretty much the same chart. If we go to the weekly, so as you can see, expansion, right, and then returning to fair value gap. This is the draw on liquidity. We have filled swing side here, and we have equal highs by here. So I'm looking for buys into these levels. So fair value gap, and then the next target is this one right here, this swing high right here. We're going to see, and we're going to see it clearly on let's see the 4-hour. So on the 4-hour we have taken liquidity from here. So this candle right here took liquidity, and the next candle immediately closed above it. So this is an order block high, probability order block, change in the state of delivery, right? And on the 1-hour, we have a breaker block right here and a market maker buy model, just like the AUD against the Canadian dollar chart. So what I'm looking for is a move to here, right? And then I will look for buys into this original consolidation. Again, I don't need the move all the way to here. All I need is 2R. So if I take my position from here and the 2R was here, that's it. I'm content, all right? So I believe we have come to the end of this video. It was a long one because it was an outlook. So imagine we went through all these pairs together. It will take forever, guys. So I believe this is the best way. And of course, we have this section right here. So step 1 buys, step 2 confirmation. Meaning, if your pair is on the first time frame, so on the daily or the weekly time frame, you're gonna put it right here. If the weekly and the 4-hour maybe, so 2 time frames are aligned with each other, now all you need to do is the last time frame. So you want to put it on step 2, right? So this particular pair is confirmed on both step 1 and step 2. So this way, you know that the pairs under this section will give you opportunities earlier than the pairs are still on the buys. I hope you understood that. I'm sorry. Anyway, let's wrap this video up. If you have any questions, please DM me my Twitter account or leave a comment down below and I'll answer you as soon as I can. Happy trading and good luck.